The digital euro should prioritize online, peer-to-peer payments because it would make digital transactions easier for people without the need for traditional financial institutions. By facilitating peer-to-peer payments, the digital euro can contribute to financial inclusion and increase access to financial services, especially for those who do not currently have bank accounts or access to traditional financial services. Moreover, prioritizing online payments would make the digital euro relevant and useful in a world that is increasingly reliant on digital transactions. Online payments are becoming the norm, and a digital euro that is optimized for these types of transactions would be more accessible and convenient for consumers. It would also benefit small businesses and entrepreneurs who may not have the resources to set up traditional payment systems. In addition, prioritizing peer-to-peer payments would make the digital euro more secure and transparent. Peer-to-peer payments are typically faster and more secure than traditional payment methods, and they allow for greater transparency in financial transactions. This would be beneficial for consumers and businesses alike, as it would reduce the risk of fraud and other financial crimes. Overall, prioritizing online, peer-to-peer payments would make the digital euro more accessible, convenient, secure, and transparent, which would benefit consumers, businesses, and the economy as a whole. As the central bank of the Eurozone, the European Central Bank, ECB, would play a central role in the development and implementation of a digital euro. The ECB has been studying the potential benefits and risks of a digital euro since 2018, and in July 2021, it launched a 2-year investigation phase to analyze the feasibility and design of a digital euro. In terms of the prioritization of online, peer-to-peer payments, the ECB would need to determine the technical specifications and features of the digital euro to ensure that it is optimized for digital transactions. This could include developing a user-friendly interface for online payments and designing the digital euro to be compatible with various digital wallets and payment platforms. Additionally, the ECB would need to work closely with financial institutions, payment service providers, and other stakeholders to ensure that the digital euro does not disrupt the existing financial system and that it complies with relevant regulations and laws. The ECB would also need to consider the potential impact of a digital euro on financial stability, monetary policy, and the broader economy, and take steps to mitigate any risks that may rise. The effect of a digital euro prioritizing online, peer-to-peer payments on the market would depend on several factors, including the adoption rate, the level of competition with existing payment methods, and the regulatory environment. If the digital euro is widely adopted and gains traction as a convenient and secure payment method, it could potentially disrupt the existing market and reduce the dominance of traditional financial institutions and payment service providers. This could lead to increased competition and innovation in the payments market, which could ultimately benefit consumers by driving down costs and improving the quality of services. However, the introduction of a digital euro could also have potential negative impacts on existing payment providers, particularly if they are not able to adapt to the new competitive landscape. It could also have an impact on the stability of the financial system, particularly if there are any unforeseen risks associated with the adoption of a digital euro. Additionally, the regulatory environment could play a crucial role in shaping the impact of a digital euro on the market. The digital euro would need to comply with relevant regulations and laws, and policymakers would need to carefully consider the potential impact on financial stability, monetary policy, and the broader economy. In summary, the effect of a digital euro prioritizing online, peer-to-peer payments on the market would depend on various factors, and the overall impact would need to be carefully evaluated and monitored over time.